When we look at the bond markets and what's happening with yield, we do have a modest overweight view on duration. We think the Fed is approaching the end of the hiking cycle. Actually, we think there's very low likelihood that they will hike again in December. Clearly, what happened last night at the Powell speech does inject a bit more kind of hawkish tone into the whole narrative. But we do think it's more of a tone shift to push back against the recent loosening of financial conditions. But we think overall, when we look at the rates market, it is that moderation in growth as well as cooling inflation that we do expect to put more downward pressure on yields going forward.
If the Fed doesn't hike in December, and you think Powell did that just because he's trying to temper expectations, will the Fed hike in January?
I think they are definitely in a more data-dependent mode. If we do see a reacceleration of inflation, or if we see that labor market is stronger than expected, there is a risk that they do have to go again. But we think we're already seeing some cooling in labor markets, and actually inflation is coming down as well. So as long as the data is aligned with the expectation of further cooling, we do think that they don't need to go again.
Sylvia, asset classes such as non-US stocks, extended credit and real estate are areas to explore to build smarter portfolios. This is coming from your long-term capital markets report. So I just wanted to focus on the non-US element of that statement. And my question is, how do you approach China and emerging markets more broadly from a longer-term lens?
Yeah, so actually from a longer term perspective, we still think Chinese equities are very attractive at current levels because of the low levels of valuation, and because we continue to expect China to generate that growth premium compared to other DM economies. So from long-term perspective, that is still an attractive area. And overall EM as well, we continue to expect a return premium across EM equities compared to DM markets going forward.
And Sylvia, throughout the week, we've been highlighting Vietnam, and it's a big beneficiary of the China Plus One strategy. And many are comparing Vietnam to China about 2 or 3 decades ago. From a frontier markets perspective, is that also a longer term bet? Is that where you want to be and own?
I think there are definitely more beneficiaries coming through in the region if we think about the shifts in global supply chains, especially that stalling of the globalization process. So Vietnam, as you mentioned, is one of the key beneficiaries from that perspective. So we can definitely look for opportunities in the region which can benefit from that shift in supply chain, and also as they expand their share in the global trade.